Welcome back to the program. Kenya is the largest securities exchange in East Africa and one of the few demutualized exchanges on the continent. In actual fact, there are 3 of them. This week, the Nairobi Securities Exchange announced its first half 2017 earnings. Profit before tax dropped to 99 million Kenya shillings from 106 million shillings during the same period of 2016. The stock exchange reported total income at half year for 346 million shillings and 11% increase in equity turnover from 73.6 billion to 82 billion. Meantime, if you look down the numbers, you see earnings per share by Nairobi Securities Exchange down 6.250% in the first half of this year. In value, the entire Nairobi Securities Exchange is worth 6.163 billion Kenya shillings. According to the Chief Executive Officer of the Nairobi Securities Exchange, he says, quote, "We have a very robust investment policy and currently the only company that is in Kenya with 0 debts." I went on to say on Twitter that we are strengthening the team, that is the Nairobi Securities Exchange team, to deliver shareholder value despite those negative numbers that were reported during the first 6 months of this year. And back here in Nigeria, the Nigerian Stock Exchange is worried at the poor compliance culture of listed insurance companies. There are also concerns at the exchange about how to improve transparency and corporate governance of the insurers. And these were part of the discussions held between the stock exchange and insurance market practitioners in the market week just ended. Let's take a listen this time to the Chief Executive Officer of the Nigerian Stock Exchange, Oscar Onyema.
We have some proposals as to how we can enhance our regulatory engagement and begin to make it easier for people to comply. I just want to point out 1 or 2 things. We would really like to have, call it an MOU, call it an SLA with NAICOM, where if there's going to be regulatory action, maybe we get 1 day's notice. So like GoldLink is a good example. We would have preferred to, because the impact in the market is so huge that we are now doing firefighting when that news is already out there, whereas we could have done a better job if we had had time to really think about it and how we'll manage. And then we too, recently we suspended 17 companies. I'm sure NAICOM would have liked us to give them a heads up that we're going to be suspending all of these insurance companies from participating in the market. So there is opportunity for better collaboration. There are so many associations, that in the industry that I think we can do a better job of engaging. So the NIA, the CEOs, and the rest of it. If we can do a better job, we also have our own associations, operators associations. And I think that some of the good things that can come out of such engagement is, if I think of my financial assets in the US, the entity that manages them is called MetLife. You all know MetLife. It's an insurance company. But what they have done is that they come with the stockbrokers, they come with the bankers, and they come as a team. And so when they give you a pitch, they pitch you for your total portfolio. And you make your investments, you do your allocations to equities, you do your allocations to bonds, to real estate, cash, insurance, and the rest of it. So we can begin to collaborate more. And when we go to pitch, we're pitching the person or the institution from a total portfolio perspective, and based on where they are in their lifetime, their risk tolerances and things like that, we can do asset allocation. And I think we as a financial industry may do better with regards to penetration. That's just an example, but there are so many areas where we can collaborate. We are really concerned with the compliance rates of listed insurance companies on the exchange. I think that of the 27 companies that are listed, only 12 have fulfilled their post-listing standards or post-listings requirements since 2014 consistently. And most of them struggle with submitting their quarterly financials. I think 31 infractions between 2014 and 2017. We are not happy when a company has an infraction. We actually celebrate companies that have no infraction. So it doesn't give us joy to punish a company that has it. We'd rather that wasn't the case. So it's something we wanted to highlight and get commitments from companies that, you already know that your quarterly will be due a certain time. So you can plan for it and how you will get there. The exchange itself, we've tested the timelines. So when we say 3 months after the year end, that you file your this thing. For us, our own deadline internally for us to file our financials is February 25th of February. So when we go after you, we've done it. We know it's achievable. And we've also come up with ways to engage with companies way ahead of time to remind you. We send you reminders and things like that. And we've also given leeway so that if there's any real reason why you can't meet the deadline, you tell us at least 2 weeks before time so that we can grant you an extension without having to penalize you. Still, some companies don't take advantage of all of these things. So we want to see a better compliance culture. We also think that there are benefits with all the things I've talked about, corporate governance, transparency, and the right. And we thought it was important to give you real-life examples. So Mansard is an insurance company. We've just chosen 2 insurance companies randomly that engage with us. WAPIC is another one. There is another insurance company I will call Company X. What we see, because of compliance, good compliance history, market engagement, so coming to do facts behind the figures, closing the market, putting out information out there, so transparency. WAPIC and Mansard, you can see price movements. So we think that there are practical, data-driven reasons why compliance culture is good, putting out information is good. There's something we call the facts behind the figure bounce. We noticed that companies, most companies, not all companies, but most companies that come to do facts behind the figures. And what facts behind the figures is you come in to the exchange, there are brokers, there are equity analysts, there are press people. And you tell them, you show your numbers and you explain your numbers and the strategy behind it and what is driving those things. They ask you questions. The next day, 2 days, 3 days after, we notice that the stock prices tend to go up because there's information.
Oscar Onyema, the head of the Nigerian Stock Exchange on the insurance sector. So what's on the agenda for the markets next week? Let's just put that up for you very quickly. You can see July inflation, food, transport, and fuel prices report from the Bureau of Statistics. That's coming through on Monday, a very big day on the economic front. Meantime, from the market, we have some good news, some not so good. Morrison Industries is rolling out what you call the right issue, and you can see the amount of shares going up there. Then, of course, one not so good news, paints and coatings manufacturers have submitted an application to delist voluntarily from the Nigerian Stock Exchange. Let's leave it there for today. We thank you for watching, everyone, and I'll see you again next time. Do have a great weekend.